All right. Hello, everybody. Welcome back to another episode of the Market Close. It is 3:45, and I am on time. Nothing like being on time on a Monday as we get into the market close, starting off the week right. And quite frankly, in the equity markets, been a pretty not crazy day across the board. I mean, the only stock I'm looking at right now as I opened up Legend, and I didn't even know if this was running into the 64s, but we are running into the 64s, 63.92 on Hoodie, up 3.5% today. There is no headline that I'm aware of. If anyone knows, let me know of a reason for why we're pushing 64, but we're pushing it, which is really nice to see. Everything else been relatively flat on the day. Palantir right here down about 2%. Rocket Lab basically flat. Nvidia 135.21 also basically flat. Tesla 341 down 2%. Meta's down about 0.21. I mean, it's been a very simple day, and quite frankly, after the downgrade from Moodys, S&P 500 39 cents away from going green, you couldn't have asked for a better outcome, right? That the markets basically would say, we don't care, and moved on. We don't have to go up, but we definitely don't have to go down, which is very nice to see. But Robinhood, for some reason, I don't know why. I really don't. But it's green. And it's one of the most green stocks today. 1 cent away from 64. Do we get there? Let's see if we get there. 63.98. I don't think we touched it yet. 64 resistance is 46,000 shares. There we go. There we go. 64 on Hoodie, broke right through it. I think we got through. There she is, $64 on Hood. Ironically, I did a podcast with Farzad and Hans today on their channel, and I didn't know what they wanted to talk about, but the first 30 minutes of that podcast, it was about an hour and a half, was Robinhood. So I think that'll come out either tomorrow or on Wednesday, so you guys can check that out. But we talked about Robinhood for the first 30 minutes, and we talked about Palantir and Tesla. But there you go, 64.02 on Hood. There is one update on Hood that maybe is causing this. It's a little bit under the radar, though, so I don't know if this is the real reason why Hood's pushing green right here. But let me show you guys the update. Robinhood has submitted a RWA tokenization framework to the SEC. So what does that mean? Real world asset RWA tokenization. The thing they're asking for is federal regulatory frameworks, no state patchwork, aka no state laws, but federal laws on tokenization. They're asking for broker dealers to freely custody and trade tokenized assets. They're asking to treat tokens like underlying assets, and they're asking for 24/7 trading with instant settlement. This is the SEC filing right here. I'll put it in the chat for anyone who wants to read it. But this is the letter that Robinhood's legal team sent today to the SEC. And essentially, they're getting ready to tokenize the world. And maybe that's why it's up 3.7%. I mean, I don't have any other reason why Robinhood would be up today, but the fact that the S&P is flat and that Bitcoin's flat, but Robinhood's green is pretty incredible. But there you go. It might be the market pulling forward the future tokenization of the universe that's happening right now. And that's why we're seeing this excitement on Robinhood. HIMS also decent day. I know it's down 3.5%, but still holding in that $60 range. I think the shorts continue to borrow shares, and that's what's leading to even more of a potential of a squeeze. So you got HIMS right there down about 3.2%, still holding that $60 range. SoFi 1370, Rocket Lab 2562, Rocket Lab going green right there currently right now. Nvidia 135.33. I think it's going to close above 135, but even if it doesn't, hell of a day for Nvidia. This thing was at 131 at like 5 a.m. in the morning. So we got a nice little recovery into the day. Google right here, 165. And then Microsoft, 457. I kind of understand why Microsoft is green. We're going to watch a video after the bell. It's about 6 minutes with Elon and Satya. And Grok is now on Azure. Grok is now on Azure. And that's why the market seems to be excited around the potential of more AI models that are becoming more and more advanced coming into the hyperscalers, aka Azure, which is getting some of that momentum. Grab right here, 509. That's basically flat. MicroStrategy 411. That is green. Where is Bitcoin? We were at 107 last night. We were at 105. Bitcoin's actually up. I take back what I said. I thought Bitcoin was flat on the day. Bitcoin's up about 2%. So that could be helping Hood. I don't think that's the only reason Hood is up, but that could be a reason that's helping it. Coinbase, by the way, is 265. Coinbase is red. MicroStrategy green. Robin at 64.12. Wow. Robin really getting some momentum today, which is nice. Now, in terms of Archer, why is Archer down? So the only reason I can tell for why Archer is down 15% is because insiders definitely sold some shares. So if you take a look at the insider selling last week, you have the CFO, CTO, and then the general counsel selling close to about 500,000 shares. I don't think this is that big of a deal, but one could argue that Archer, given there is not, a lot of earnings yet in the company, that maybe they were kind of using the pump from last week to sell. The pump was kind of just based on, I don't know, the CEO going on Jimmy Fallon. I really don't know why it pumped last week, but for whatever reason, I think this getting disclosed today is kind of what got people potentially upset. Archer right here down about 15%, but this is a volatile name. It goes up, it goes down. It is up from $3 back in November 2024, so it's still up more than 3x, but it is giving back a decent chunk of the 25% gains that it got last week, and that one is now down about 15%. Where is the S&P? We got 10 minutes into the close. S&P, wow, 594.66. There she goes. If we close green on the S&P, it doesn't even matter if it's by 1 cent. It is a fundamental refutation, Robin, at 64.25 of Moodys. I think we can all agree no one cares about Moodys anymore, and the market definitely is not stressing it. UNH also 315. This is another big winner on the day. Congrats if you bought the dip on UNH. I mean, 7.86%. That is a continuation of the 18% move from the low. So it's basically up 25% from that 248 low, now at 315, which is not bad. Not bad at all. Seeing the S&P 500 get, or seeing UNH get to those levels and the S&P going green. The Qs as well, NASDAQ right here, 521. That is just turning green as we get into the close. And then we had Jamie Dimon, who said some things. Let's listen to some of his thoughts. JP Morgan relatively flat on the day. He actually said some things that were a bit more surprising, and some of them have to do with Bitcoin.
Further into what JP Morgan CEO Jamie Dimon said earlier today at the company's Investor Day, Leslie Picker has been there and is here with those highlights. Hey, Leslie.
Hey, Mike. Yeah, Dimon fielding a lot of questions, as you can imagine, about the topics you were just discussing, the macro picture. He characterized the current geopolitical risk as being, quote, very, very, very high. Dimon said people feel good because they haven't seen the effects of tariffs, calling the market's round trip essentially a, quote, extraordinary amount of complacency. He said even with today's current rates, the tariffs are still at, quote, extreme levels. And given all the macro uncertainty, he's looking at all sorts of scenarios and what they mean for the firm and the broader economy.
We do look at the range of potential outcomes. I think the worst one for a bank and for most companies is stagflation, which is basically a recession with inflation. I think the odds of that are probably 2 times the market thinks. I don't know what's going to happen. We would be fine. Okay, what happens in that is credit losses go up. They will not be like the global financial crisis. I think credit losses in a recession will be worse than other people think.
On succession, Dimon said the board has, quote, intent to think about succession. He said it's up to his directors as to whether he's CEO for 4 more years and maybe 2 or 3 as executive chairman, noting that's a, quote, long time. Mike.
So those were some of the main quotes. The big quote that got everyone excited was when Dimon said, we're going to allow clients to buy Bitcoin, but we won't custody it. We're going to allow clients to buy Bitcoin, but we won't custody it. This is a huge 180 from what Jamie Dimon was advising his wealth managers in the past, that were not letting their clients get into BlackRock or an ARK fund when it came to Bitcoin, any of the Bitcoin funds that custody it. So JP Morgan doesn't want to release their own ETF that's like custodying Bitcoin and then getting fees on the AUM, but they're okay with allowing their wealth managers and financial advisors to advise their high net worth clients to buy some Bitcoin. I think even Jamie Dimon, who has been a Bitcoin bear for a long time, even he's recognizing, hey, maybe we're going to keep printing so much money that we need some level of a hedge against the money printing, and that might end up being Bitcoin in and of itself. Tommy, thanks for being here. He says, if you can say hi to him, Ben, he will be blown away. Ben, thank you for being here. If Tommy is your dad, then shout out to you both watching together, but appreciate you, Ben. And thank you for being part of the show. Robinhood right here, 64.31. Wow, Hoodie, did not expect this type of move on Hood today. It was kind of flat throughout the entire day, and really in the last hour, it's breaking out 4.15%. Kind of leads me to believe maybe there's some news that's coming out that we just don't know about. But if that is happening, then I guess we'll find out after hours. The only news, again, was this right here, real world asset tokenization. Robinhood is pulling forward. We talked about that last week. They submitted a letter to the SEC. It looks like they are really trying to get that to be in place. Anyone can read this. I'll put it in the chat. It's a 9-page kind of outline on how they think assets should be tokenized on whatever blockchain they launch to be able to do this, and whatever partnership they get into with maybe Solana, Ethereum. So it's going to be really exciting to see if that gets any legs. And if it does, maybe that's why Robinhood is getting some momentum. 3.84%. Nvidia right here, 135.20. Tessie, 341. You got Palantir, 126.34. Basically was flat the entire day, and then Rocket Lab up just a little bit towards the end of the day at 25.63. QBTS D-Wave, this had a big morning, continuing to have a big day, 6.94% on the day, 1309. So quantum, this has a quantum stock doing well. Not all the quantum names are doing well. So Rigetti, this one is, well, it's up 1%. IONQ, that's basically flat. Yeah, so some of these recovered. IONQ was down 3% of the day. That one recovered, but D-Wave having the best out of the quantum names. Archer right here still down 14%. GameStop down 2%. Intel down 1.4. Square's up 1.2. Disney's up 0.77. And you got HIMS down 3.7. I mean, realistically, if you told me that after Moodys and after bond yield spiking, which by the way, even bond yields are coming down. This was 4.567 in the morning. Now it's at 4.457. It's nice to see a little bit of recovery here and potentially more people buying bonds. So however you slice it, it's like, you know, I'm sure there's plenty of different macro issues that we have to continue to worry about and monitor. Even Bostic today was pretty bearish. He said, I only expect one cut for the year. And still, the markets do not care. They said, you're not going to fool us like you did in April. We know we're going higher. We know that it's going to be really hard to have a April 8th Liberation Day type of momentum driven downside rally. And as a result, I think people are just not leaving. And if anything, more money is coming in. This is another reason people are not leaving. We're going to explore this a little bit more after the bell. I found a startup on Twitter. It's called GenSpark Super Agent. In 45 days, genspark.ai. Let me know if anyone knows about this. I just found this out today. They reached $36 million in annual recurring revenue. Like, at some point, I think we have to acknowledge the reason Palantir is getting this multiple, the reason these enterprise software names are expected to grow dramatically is because if these random AI B2B SaaS companies are making 30 million bucks in 45 days as a startup, not even as like an established public company with marketing budgets and all that stuff, they just became the fastest growing startup in terms of ARR, 20 people and $0 spent on paid distribution. That means the product was so good as an AI super agent, and we'll look more at their demo video in a second, that it went viral enough to capture $36 million of revenue in 45 days. I mean, this goes in line with Cursor, right? Cursor, which is an AI coding tool, they reached $100 million in about 3 months. I mean, it's getting to the point where I think the market is expecting massive types of growth from some of these AI names. And that's why they're giving them these premiums. And these startups are being kind of evident to show that they're getting these premiums. Robinhood right here, 64.23, Palantir 126.51, SoFi 13.73, Meta right here at 64, TFC at 41.36. And then you got Googs right here. Googs also running into the close just a little bit, 166.47. Right here on Google. The all-time high for Hood is, what is it, 65? No, 82, I think. 82 all-time. This year, I think this is a 2025 high for Google, or sorry, for Hood, if I'm not wrong. I don't think, no, we hit 67 this year. We hit 67. 85 back in 2021. Google I.O. tomorrow, that's going to be a big one. I'll be streaming that. That's going to be a very, very important one to see what Sundar says. Into the close, 65 resistance on Hood. I don't know if we'll get there in about a minute, but 65 resistance is 140,000 shares. That's going to be a little tough to crack in about 2 minutes, but any close above 60 would be incredible. Amazon as well goes green. Amazon was at 201 in the morning. Amazon right here at 206. Dude, it's one of those things where it's like either this is a massive bull trap again, even though it's hard for it to be a bull trap after, 5 weeks of consecutive green. Like, that's one of the most nuanced bull traps that I've seen in a while. Or this is genuinely big money coming off the sidelines and saying, you know what, we missed it. We're not missing it again. Bitcoin right here at 105, even if bond yields are going to be aggressive, even if the deficit is going to increase, the solution. I mean, look, if you think the deficit's going to increase and we're going to inflate all of our money away, why would you stay in cash? Right? Like, if you really do think that we're going to have this crazy deficit and the Fed's going to print all of our money away, then you would have to allocate that cash somewhere. And it's either going to be crypto, it's either going to be real estate, or it's either going to be the stock market. So risk assets to an extent are going to get some of that capital. And by the way, if no one's buying our bonds, this is kind of the worst case scenario, but also the best case scenario. If no one's buying our bonds, the Fed's going to step in and buy our bonds. It's going to turn on the money printer. Risk assets are going to go crazy again. Same thing with Bitcoin. That could also be explaining some of the momentum that we've been seeing over the past couple of weeks. All right, here we go. We got some more headlines to run through. Monday, May 19th, 4 p.m. Thank you, everybody, for being here. The stock market is now officially closed. All right, We are done with Monday. Look at Hoodie, 64.25 on the close, dude. My goodness, I did not expect that out of Hood. I don't think that's because of Bitcoin. I think there's something else going on. Look at Rocket Lab, 25.78, up 0.82%, trying to go for 26. Maybe there's going to be some more news we see on Hood. Maybe it was just more macro, but very nice to see. Did we go green on the S&P? We went green on the S&P for folks, 594.48 on the S&P. We went green after Moodys. No one cares about Moodys. Venture Global, great day as well, 3.27%. You had Alibaba, that was down 5%, now was down 0.4%. The VIX was up still 4% on the day, so we did have a little bit of volatility right there. The Qs ended green, even if they ended green slightly. Uber, 92.28. You had Home Depot, they have earnings tomorrow, down about 0.37%. Lyft, down about 0.27%. CoreWeave, my goodness, this stock up 8% after being up 20% last week, or 25% last week. So big day for CoreWeave on their earnings as well. AISP, I don't know what this company is. This is an AI company, Airship AI, market cap of 170 billion. They were up 20% of the day. Looks like they had some headline. But again, a lot of these AI names getting momentum in the private markets, and probably why the public markets are reflecting some of that momentum as well. Palantir, the big headline of the day, and I'll talk more about this in the daily recap, was a $218 million contract for a data platform with the Space System Commands and the U.S. Space Force. We don't know how many years. I talked to a couple people. Most people are speculating 2 to 5 years on this contract. So I'm still trying to get that information, but we did get $217.8 million under a data software services release for Palantir USG, which is their U.S. government business, to create a data management solution, including seamless, synchronized, multi-domain warfighting to space and air operational communities. So the government contracts continue to flow in for Palantir. It's probably why we've accelerated government growth to about 45%, which is also helping the multiple in the stock. Palantir right here, 126.33. By the way, I found a tweet because Chad commented under this post, and I linked a post again. So he commented from mud to space and everything between. And then I found this post from about 2 years ago to the day, May 8th, 2023. And it's when Alex Karp first answered an AI analyst by saying, our goal for AI is just to take the whole market. We have no pricing strategy. 2 years ago, Karp said that. And boy, have they delivered on that strategy. And the fact is, they only have 760 customers. I mean, they still have not really taken the whole market, but they didn't need a pricing strategy like some of their critics said they needed back then. They just needed a good product. That's it. They needed a good product. And the product would do all the talking. And that's kind of what we've seen in the context of the growth. Palantir right here, 126.26, SoFi 1370, PayPal 72.32. Let me know what moves you guys made today. If you did anything, if you sold any calls, if you sold any puts, even the HIMS premiums, even on a red day, were still juicy. Those $90 calls for June were pretty damn good. Nvidia 135.50, going green a bit after hours. Amazon right here, 205.93. Microsoft again with Grok. We'll look at that video in a second, but Microsoft right here, 458. That's a 2025 high, which is nice. Tesla was relatively flat on the day. They did get that upgrade by Cantor Fitzgerald to 425. So we are seeing some of the street continue to believe in the Tesla story. We haven't seen a $400 price target in, I would say, at least 3 months. So it's nice to see, even if the street is chasing the price, them get a little bit back on board of the story. And then Robinhood, 64.20 on the day. Seattle JCB added a little bit of grab. Tyler sold a $23 put on Rocket Lab and ASTS. Evan bought INOD at 35.30. Brian, some UNH calls. That's fair. GBTC covered calls. Okay. Selling some volatility against your Bitcoin. 450 shares of Zim. Brian sold some Hood and IBIT calls. I don't hate that. Nick bought some more Lyft today. Okay, not bad. Barra sold some of her grab. That's cool. Sold 45 puts on Tempest. Dude, this thing has also been a monster all year. I still don't know exactly what they do. I know it's healthcare AI. I just feel like, I don't know if Tempest has a moat. It's something I've always struggled with, even though Nancy's in it. Maybe the moat is that Nancy's in it. I just feel like a lot of AI software companies could do what Tempest is doing with healthcare, but maybe I'm wrong there. Regardless, Nancy's in it. She likes it. Oh, speaking of politicians, dude, this is why we need to look at what the politicians do. Representative Dan Newhouse. I don't know who this guy is. I don't know what he represents in the United States. He does 4th District of Washington, of Washington State. Okay, Washington State. Let's just say he sold UNH at an opportunistic time. He sold it right before you see this red collapse on the screen right here. So, yeah, our politicians, They may have chose a life of public service, but they somehow know a lot about the stock market. He sold it on April 11, 2025, when it was closing in on $600, and now it's at 300. So shout out to Dan Newhouse, him and Nancy gunning for the title right here in terms of the best politician trader. Cool. So that's some of the moves that we had in the market. Let's go to that video between Elon and Microsoft. So Microsoft had some developer day at their conference. Elon is bringing Grok to Microsoft. Here's what Satya and Elon had to say about the partnership.
Thank you so much, Elon, for being here at Build. I know you started off as an intern at Microsoft. You were a Windows developer, and of course, you're a big PC.
Did anyone know Elon was an intern at Microsoft? Because I didn't know that. I didn't know that, but apparently Elon has done everything. This man has done literally everything. I did not know he started off as an intern at Microsoft.
For being here at Build. I know you started off as an intern at Microsoft. You were a Windows developer, and of course, you're a big PC gamer still. You want to just talk about even your early days with Windows and the kinds of things you built?
Yeah, well, actually started before Windows with DOS. I had one of the early IBM PCs with MS-DOS, and I think I had like 128K in the beginning, and then it doubled to 256K, which felt like a lot. So I programmed video games in DOS, and then later in Windows. Remember Windows 3.1?
Yeah. No, it's wonderful. I mean, the last time I chatted with you, you were talking all about everything, the intricacies of Active Directory. And so it's fantastic to have you at our developer conference. Obviously, the exciting thing for us is to be able to launch Grok on Azure. I know you have a deep vision for what AI needs to be, and that's what got you to get this built. It's a family of models that are both response and reasoning models, and you have a very exciting roadmap. You want to just tell us a little bit about sort of your vision, the capability. You're pushing on both capability and efficiency, so maybe you can just talk about a little bit of that.
Sure. So yeah, with Grok, especially with Grok 3.5 that is about to be released, it's trying to reason from first principles, so apply kind of the tools of physics to thinking. So if you're trying to get to fundamental truths, you boil things down to the axiomatic elements that are most likely to be correct, and then you reason up from there, and then you can test your conclusions against those axiomatic elements. And in physics, if you violate conservation of energy or momentum, then you're either going to get a Nobel Prize or you're wrong, and you're almost certainly wrong, basically. So that's really the focus of Grok 3.5 is sort of fundamentals of physics and applying physics tools across all lines of reasoning, and to aspire to truth with minimal error. Like there's always going to be some mistakes that are made, but we aim to get to truth with acknowledged error, but minimized error over time. And I think that's actually extremely important for AI safety. So I've thought for a long time about AI safety, and my ultimate conclusion is the old maxim that honesty is the best policy. It really is for safety. But I do want to emphasize, we have and will make mistakes, but we aspire to correct them very quickly. And we are very much looking forward to feedback from the developer community to say, like, what do you need? Where are we wrong? How can we make it better? And to have Grok be something that the developer community is very excited to use, and where they can feel that their feedback is being heard, and Grok is improving and serving their needs.
Yeah, I know it's in some sense, cracking the physics of intelligence is perhaps the real goal for us to be able.
And this was really important for me. It seems like Grok and how it's trying to differentiate from ChatGPT is focusing on those first principles type of reasoning models, axiomatic thinking, right? How do we start with understanding the truth and just the truth, and then be able to build a reasoning model that gives you the truth? Solving that hallucination problem is a very hard thing to do. ChatGPT is working on it. Grok's working on it. Gemini is working on it. Anthropic's working on it. If Grok can pull it off in the enterprise, more than anything matters more than not having hallucinations, because you're dealing with very sensitive data. So if they can work with an axiomatic paradigm that actually deals with finding truth inside of the reasoning models, maybe that is why Grok might be one of the largest used models on an Azure, GCP, or an AWS.
Able to use AI at scale. And so it's so good to, take that first principles approach that you and your team are taking. And also you're deploying this. I mean, one of the things about sort of what you do is you're doing, unsupervised FSD on one side, you're doing robotics. Of course, there's Grok. So you're deploying Grok across all of your businesses from SpaceX to Tesla, obviously at X. I would love to even, one of the themes for this developer conference, Elon, is we're building pretty sophisticated AI apps, right? It's not even about any one model. It's about orchestrating multiple models, multiple agents. Just anything that you're seeing in the real world application side, even inside of your own companies, when you think about even a Tesla or a SpaceX, where you put Grok and the other AI models you're building?
Yeah, it's incredibly important for an AI model to be grounded in reality. Reality, I was saying, which is like physics is the law and everything else is a recommendation. Which is, I'm not suggesting people break the laws made by humans. We should generally obey the laws of humans, but I've seen many people break human-made laws, but I have not seen anyone break the laws of physics. So for any given AI, grounding it against reality, and reality, for example, as you mentioned, with the car, it needs to drive safely and correctly. The humanoid robot Optimus needs to perform the task that it's being asked to perform. These are things that are very, very helpful for ensuring that the model is truthful and accurate, because it has to adhere to the laws of physics. So I think that's actually maybe somewhat overlooked, or at least not talked about enough, is that to really be intelligent, it's got to make predictions that are in line with reality, in other words, physics. It's a really fundamental thing, and being able to ground that with cars and robots is very important. We are seeing Grok be very helpful in things like customer service, and the AI is infinitely patient and friendly, and you can yell at it, and it's still going to be very nice. So
that's good.
Yeah, and so I think in terms of improving the quality of customer service and sort of issue resolution, AI is already Grok is already doing quite a good job of that at SpaceX and Tesla, and we look forward to offering that to other companies.
This is really the bull case for Grok, right? I mean, one of I had a friend who invested in XAI back in June, and his bull case to me was that he thought Grok would become the operating system for Optimus, eventually incorporated in FSD, right? So you could talk to your car, and then inevitably it would play a role in X. Obviously, XAI ended up buying X for $45 billion a month ago. So now the entire holding company is worth, I think, $125 billion. OpenAI still worth $300 billion. So a little bit more than XAI. But I mean, I think that is the bull case for Grok. That really does seem to be the bull case. And if they can implement it in the enterprise applications, we know Palantir had a major partnership with TWG and XAI last week or 2 weeks ago. And that has to do with regional banks. There's a lot of different applications that can become very exciting. It's just a question of their business development, their ability to execute, and then obviously the quality of the model in comparison to something like ChatGPT. Robinhood After Hours is still running. I don't know if we're going to get any news or something. Again, for those that are curious why I think it's up, I believe it's because they submitted a document to the SEC about real world tokenization of assets. And maybe it's going to happen sooner than we think. I thought, truthfully, 2 weeks ago on Robinhood Weekly, I said this is going to happen maybe 3 years from now. Now I'm thinking it could happen 3 months from now. I mean, with Trump's SEC and Paul Atkins and how friendly they are, I thought this would take a long time. I just didn't believe it would be that quick. If this is quicker than what we thought, and you can buy Apple on the blockchain instead of having to buy it on Schwab or Fidelity or even a Robinhood, I mean, things can get really exciting. But I don't know if that's the only reason why it's pushing 65 after hours. I feel like there's something else. S&P inclusion, but we don't get that data until the end of June. So I don't think that would be the reason. It's not Bitcoin. I mean, Bitcoin's had a good day, but not enough for it to go up 5% on Hood. Yeah, Bitcoin's up 1.7%. That wouldn't create a Hood pump. This has to be a Hood unique reason for its move, and maybe that's going to be revealed later today or maybe during the week. We did have someone buy $600,000 of Robinhood's $63 calls expiring May 30th. So we did have some pretty bullish option flow that came in today. But again, I still don't know if that's the reason why Hood's pumping or why someone bought all those options. Maybe they know something else. Shout out to Arnie right here in the chat. Arnie says, wild to see now. Everybody wants Hood after crapping on it. Arnie is absolutely demolishing the indices with Palantir and Hood. And it's funny because a year ago, I remember it was around this time, someone said, someone who I respect too, and I was really pissed off when they said this. I left a pretty angry comment at what they said, and I'm sure Arnie respects them as well. But someone we both respect, I'm not going to say who, but they said, "Oh, Arnie, you're just lucky." And I was so pissed off when they said that, because to think that Palantir and Hood are just luck, this is not the comment. The comment I posted a year ago, but it's the same sentiment is here. It's like you, to find Hood, you have to go against the grain. To find Palantir, you have to go against the grain. It's not luck. Of course, there's some luck involved in timing and all that stuff, but the idea that you would take an asymmetric bet on a Palantir or Hood versus a Snowflake or a SoFi means you legitimately had to see something the rest of the world didn't see. And that's why Arnie, as you can see right here, is absolutely destroying the S&P 500 over the past 4 or 5 years of his performance. And I just think it's disrespectful, bro, because that person was singling out Arnie. They're like, "Oh, Arnie, Robinhood is just luck." And I was like, really? It's just luck? Like to analyze a company to the extent that we analyzed it when it was $7-8 and not pick the other person in the category? To say that's just luck is, I just felt that was a bit disrespectful, dude. I felt like that completely took away any level of due diligence that someone did on the name. So Robinhood 64.75. The growth story is there. The market's there. The TAM is there. They just have to go capture it. And now Q2 is going to be amazing, bro, because like all this volatility to the upside, S&P trying to get back to all-time highs, Bitcoin at 107. Like if the fear was Q2 wouldn't have enough volatility to create momentum in terms of keeping up those growth rates, I think Robinhood's going to grow again 50%, even if June is not the best month, because April already was their best month in options and equities. May doesn't look like it's going to be any far behind. And as long as June is normal, I think we're going to have a pretty good Q2 for Robinhood. Coinbase customer data theft to be investigated by Justice Department. Could that be a reason Robinhood's pumping? Because the market is like thinking Coinbase is going to lose some customers and they're going to go to Hood. I feel like that's a stretch. Coinbase down about 1.2%. I don't think that's the answer, but I don't have a reason for, or at least a better reason for why Robinhood's pumping right here. Maybe we'll get more data later today, but this move is a bit unnatural. Robinhood, again, it's very high beta to the market, which means the market needs to move, like an S&P, like a Q, like a QQQ, like a Bitcoin. Those were flat throughout the day. Bitcoin was up 1%, but like that's not enough to create a 5% move on Hood. So I feel like it's something more Hood specific, and I guess we will find out soon. Okay, so here's something I want to show you guys that helps us understand why Palantir is getting their multiple. This is a company called GenSpark AI. I found them out today. They are the fastest growing startup ever in terms of annual recurring revenue. 20 people on their team, 45 days. They made $36 million in ARR. Here's what the company does. And you tell me if, this company deserves to be getting this revenue or where the AI revolution is going, because it is pretty incredible to see some of these startups scale the way they're scaling right now.
GenSpark AI Sheets, a full agentic tool that can help you from extensive data collection, analysis to visualization. Forget Excel. Now you have a personal data analyst. Here's the raw data of all marketing campaigns from a company over the past year. Upload these 4 Excels to GenSpark. GenSpark quickly transformed this chaos into a clean, structured AI spreadsheet. Now just ask, which type of campaign has the best performance? GenSpark immediately executes code and applies formulas. It generates not only charts for different channels, but also a radar graph highlighting email campaigns as the winner. Let's probe deeper. What's the correlation between content variation and performance? GenSpark quickly finds negative correlation with ROI and recommends 1 to 4 variations as the optimal range. Finally,
for everyone watching this and saying it's a GPT wrapper, that's what I thought as well. But how the hell did they make $36 million in 45 days? Like if it's a GPT wrapper, someone should be able to do this on GPT. And if it is a GPT wrapper and that's all it is, then I guess we're living in an age where GPT wrappers are going to be able to become multi-billion-dollar businesses, because whatever optimization they added to GPT in the back end is leading to $36 million of demand for a brand new startup. I mean, I don't think we've seen something like this even in the internet age, especially because a lot of those companies in the internet age didn't actually have real revenue.
Show me a comprehensive performance report. Within moments, GenSpark delivers an executive summary with clear data visualizations and talking points addressing all key questions your boss might ask. GenSpark can automatically find companies, people, products, or any data you need. Let's ask GenSpark to find healthcare startups that are at Series A or Series B stage, founded after 2020, with their most recent funding round occurring in 2024 or later. Within minutes, GenSpark delivers a comprehensive spreadsheet profiling 129 companies, all with recent funding in 2024, founded after 2020, at Series A or B, complete with industries, founders, and investors. Next, if you're a recruiter, tell GenSpark, identify senior UX designers with hyper-specific needs. Watch as it compiles profiles of qualified specialists with their experience in AR or VR, their proficiency in Unity and Unreal Engine, and experience with eye tracking technology. For brands tracking their social media performance, GenSpark can search YouTube and aggregate data from all relevant videos.
I mean, dude, I feel like Google or Microsoft or Palantir could easily do this stuff. So I have no idea if there's any moat, but the fact that they've been able to generate revenue on it, to me, is incredible. Because in enterprise B2B sales, like, you got to be able to actually sell the product and get people to, use it in their own enterprise workflow, probably to have a couple days or weeks of beta testing it to see if it's worth paying for. And getting 45 million in commitments is pretty incredible. So if anything, look, even if the product doesn't have a moat, if people just, as Arnie said in the chat, hate Excel as much as they hate Excel, and they want an alternative of visual data analysis and then insights and actions they can take from that data, even if you're on a small scale, even if you're not like a BP or an Airbus or something, there might be a massive market for some of these BI tools that are powered by AI, business intelligence tools. And that could also explain why Palantir gets their multiple, because maybe the market's expecting Palantir to grow legitimately 35 to 40% for the next decade, if this is the market that we're entering into when it comes to enterprise AI. So again, every time I see a new startup that's putting up some crazy numbers, I'm going to show you guys, because I think it just gives us a better understanding of why. And not just investment. It's not $36 million of seed funding. This is $36 million of revenue, which is way more important than just getting a VC to give you a check. That to me is a lot more evidence that this market is way more real than we thought. Tesla right here, 341, Hood 6474, still green after hours. It closed at 64.15. Now it's 64.70. Amazon right here at 205.95, and then Nvidia 135.47 on the day. If Hood gets into the S&P 500 in June, I don't know if we go to 80, but I do think we go higher. And maybe, who knows, maybe people think S&P 500 is definitely happening in June, and that's why we're seeing some of this pump today. But I don't know, dude. It's pretty damn exciting, just their overall narrative and potentially where the market is thinking this company can go. CoreWeave right here up about 8%. Cisco up about 0.5% right here. Microsoft again had its 2025 high today, which was nice. Airtable is a really interesting startup. I haven't heard about them in a while, to be honest. They were a very highly valued startup back in 2021. I wouldn't say they were a bubble startup because they have a lot of users and revenue, but they did get a pretty aggressive multiple back then. I haven't heard much from them since. I don't know if they kind of pivoted to AI, but Airtable was one of those big startups back in 2021. That's another reason this funding environment feels a little bit different in 2021. In 2021, remember, the biggest startups that were getting funded were these nonsense, stupid Web3 companies that were saying we're going to decentralize all of social media and everyone's going to be able to like log in via some passkey into every single app. It's like, no, all of that was stupid. The only way to monetize those platforms is via ads. In ads, you need a username and password controlled by a centralized entity. Like, none of the decentralized social products made any sense, but those were the ones getting funded, like an OpenSea, right? NFT marketplace. It was worth 13 billion. Now it's worth like 500 million. This time it's different. This time it's AI, which is not only great for margins, even if the valuations are a bit aggressive, but there's actual use cases. And with Web3, there were no use cases at all. Now, decentralized finance has a little bit more of a use case, but the whole Web3 decentralized social revolution, it was absolute nonsense. And I didn't have a YouTube channel at the time, but back then I was telling myself as I was analyzing this, I was like, this is stupid. I was just like, there's no way this is like, I wouldn't have invested in a single one of them because I fundamentally didn't believe in the narrative. And you know, given I was trying to build a YouTube channel at the time and trying to build a social presence, I understood that the only way a creator can get discovered is by an algorithm being able to connect your content to an audience, which means you need to have centralized data. You need to have algorithmic control over that data. You need to have massive network effects. All of those things the Web3 startups were pitching as like their ability to democratize and reindustrialize. It was like, that was never going to happen. You need a YouTube, you need an Instagram, you need a Twitter to be able to centralize all that content in one place to be able to get discovered. And as a creator, my biggest priority is how do I get my content in front of more people? So I thought a lot of the Web3 startups just, you know, really didn't make sense. But AI can help accelerate the discovery process because it increases the algorithmic reach. So from an AI perspective on creators, I think it makes a lot more sense. Bitcoin right here getting a little bit of love, 105.7. Maybe that's explaining Hood's momentum, trying to crack 106. We did hit 107 on Saturday. We were at 102 in the morning. So you got a $5,000 candle from 102 to 105, which is definitely nice to see right here in the context of Bitcoin. Amit, what are your thoughts on Net? I haven't looked at this company, Cloudflare. I really haven't gone through their numbers. I do know that they are central towards like a lot of websites on the internet, but I have no opinion on the stock itself. So this is one I have to put on my list and take a better look at. Team Atlassian is one people talk about as well, but they crap their numbers every time on earnings. This was down like 15%. But all the SaaS names, you know, continue to get a little bit of a bid. Obviously, Palantir is a bit more aggressive in terms of its momentum here, but the SaaS names are back in style. Salesforce right here, 287. That was down about 1.2% on the day as well. Google DeepMind founder just tweeted that tomorrow's event, he's going to drop something big. Okay, I think that Google I/O is definitely something we have to look at. Is that Mustafa? Did Mustafa tweet that? Let me see if I can find the tweet. Yeah, I think Google's going to crush it tomorrow. I have no idea what they're going to announce, but it feels like they're going to announce something really cool. And if they do, it should be very, very exciting for Google. Obviously, to change their narrative, right? Because the biggest narrative is that search is dead. Google right here, 166.59. I think it's good that Sundar did that interview to kind of give people a little bit of a preview of how he's thinking about it. I think tomorrow he's going to mention AI a lot. And if so, that should hopefully get the market to kind of change their tune around Google. Yeah, here we go. So this is the founder, Demi Hassabis. This is what he tweeted, cooking up something tasty for tomorrow. All right, dude. Let's get the market excited. We got to get Googs to get some momentum. It's one of the Mag 7s that really hasn't caught up this year. The actual event tomorrow, let me see what time it's going to be. I'll be streaming it May 20th. I think it'll be happening literally at this time, 4 p.m. Eastern tomorrow. 1:30 p.m. No, 1 p.m. Eastern. Okay, so the keynote's at 10 a.m. Pacific, 1 a.m. Eastern. Okay, so I'll be live 1 a.m. Eastern tomorrow and 10 a.m. Pacific. We're going to see what Google has to say. It's going to be exciting, dude. I think there's going to be some interesting stuff that they have to say. Jamie says, Amit, you always mention that you don't like Bitcoin since it's not a business, but you do you get that the narrative is essential purpose is fighting monetary debasement? Yes, 100%. I just personally would rather buy Hood. Like I like owning actual businesses. I like owning something that I can sell calls against or sell puts against. And I am pretty convinced that Bitcoin's momentum uniquely benefits Hood. And there's a little bit of a beta on how it benefits Hood better than a one-to-one correlation. So I just don't feel like I need to own Bitcoin in and of itself to get the benefits from it. If you're buying Bitcoin because you legitimately think there's going to be some anarchy one day and the dollar is going to go to nothing, then I think you're going to have bigger problems than just owning Bitcoin, right? So I do believe that fiat currency is being debased. I think that's one of the reasons why Bitcoin's getting this momentum. But I personally would just like to own something that benefits from the volatility of that. And the problem is with a MicroStrategy or Coinbase just sucks as a business. Like it's just not a good business at all. It's just like it's alpha to Bitcoin, but that's all it is. Whereas Robinhood is like trying to become the Amazon of finance. Bitcoin just happens to be part of that thesis. And then MicroStrategy, the net asset value premium you're paying is aggressive. And if you don't want to pay that type of premium, then Hood at 25 times 2026 earnings, I think it's cheap. From a business perspective, it's easy to kind of go long here, even at $64 and not be too afraid about it. So yeah, That is why I buy Hood. But also the other thing about Bitcoin, dude, is like, realistically in this cycle, does it go to 200,000? I don't know. Does Hood get to 80, 90? Yeah, I think so. And so like if everything goes the right way. So I just think from that perspective as well, I think there's a little bit more alpha in buying the picks and shovels versus the gold itself. You can do this with IBIT as well. Yeah, you can do this with IBIT. That's true. The premiums are a little bit more juicier on Hood than IBIT, but yes, that's definitely something you can utilize from there. Okay, so another headline that I didn't talk about is Russia and Trump's call with Putin. Apparently it was good. So the Trump-Putin call was very informative and helpful. This is Russian state media, and then we'll read what Trump has to say. The call lasted more than 2 hours. Putin said a ceasefire with Ukraine is possible once agreements are reached, and Putin says we're generally on the right track. Now, Trump said about the call, just completed my 2-hour call with President Vladimir Putin of Russia. I believe it went very well. Russia and Ukraine will immediately start negotiations towards a ceasefire, and more importantly, an end to the war. The condition for that will be negotiated between the two parties, as it only can be because they know the details of a negotiation that nobody else would be aware of. The tone and spirit of the conversation were excellent. If it wasn't, I would say so now rather than later. Russia wants to do a large-scale trade with the United States when this catastrophic bloodbath is over, and I agree. There is a tremendous opportunity for Russia to create massive amounts of jobs and wealth. Basically, Trump right there is setting up a trade deal, potentially with Russia, after there's some end to this war, which quite frankly and unfortunately might be the only underlying reason why Putin even wants to end this war, if he's getting an agreement from Trump that he'll negotiate and take off the sanctions from Russia once the war is done. Likewise, Ukraine can be a great beneficiary on trade in the process of rebuilding its country. Negotiations between Russia and Ukraine will begin immediately, and I have informed President Zelensky of Ukraine as well. So look, I think at this point, everyone just wants the war to end, and maybe Putin's lying, like he's been lying for the past couple of months about negotiations for a ceasefire. But if he's not lying this time, and we actually do get some meaningful progress on a ceasefire and then an end to the war, it looks like there will be some trade possibilities with Russia and Ukraine via the United States. And as a result, that might create more momentum for the markets. I mean, at the end of the day, if we get more trade deals and we get a peace deal and we're able to resolve some of the stuff going on in the Middle East, and you have earnings growth still give you 12% in Q2, which we had in Q1, it's just, there could be a lot of ways that this market continues to go higher. I mean, we are only 3% away from all-time highs. We are not far off. So for the bears that say we have to go back to 5,500 on the S&P, I just want to know why. Like, why? What is the logical reason? Labor market's fine. Yeah, the Fed's not cutting rates, but whatever. Eventually we'll get a rate cut, hopefully towards the end of the year. But I don't think the market needs a rate cut right now. It would be nice, but I don't think we need it literally right now if earnings growth continues to be how it is. Trillions of dollars investments across the world, AI startups getting $36 million in 45 days, showing the demand for this momentum. I mean, Tesla launching FSD in June. If that goes well, you have this whole new curve of how the market's valuing that and all the ancillary companies that will benefit from Tesla launching FSD. There's a lot more arguments on the bull side versus the bear side. Maybe valuation. So I would agree on valuation. First of all, I agree on valuation on certain names. Obviously, certain names are expensive. There's no denying that. But the S&P 500, if we continue to put up 12% earnings growth, which, Q2 is going to be the first quarter after tariffs. I don't know if we're going to be able to do that. But if we do, I think we can expand that 21 times to 23, 24 times, and the market's not going to go crazy, especially if there's no other place to put your money. Like if gold already has happened in terms of that trade, and, not a lot of people want to invest in Bitcoin, real big institutional money, it's going to have to go into the markets. And real estate's not opening up because we're not getting any rate cuts. So real estate stocks as an investment right now. So it's like, what's left other than letting your money get inflated away? It ends up being the markets. Not to mention, we got $6 trillion again on the sidelines, 6.94 trillion when it comes to money market funds. By the way, the Bitcoin ETFs, here's the updated number, 6.5 billion in AUM in the past month. 6.5 billion into the Bitcoin ETFs, which is not bad. Not bad at all coming into Bitcoin. Also UNH, right? Like one of the worst narratives you could imagine for a company like United Healthcare, losing 55% of its market value. And that one, although not a full recovery from 248 to 314, it just shows you how much money was ready to get into something that seemed undervalued. Objectively, through the numbers, probably was undervalued, but just needed the sort of animal spirits to say, hey, I'm going to take a chance on this. And then the CFO and the CEO bought $30 million worth of stock on Friday. And that probably pushed it over the edge in terms of getting some more momentum right here. So I just think there's a lot of different catalysts. Will I add more TLT? You know, I don't know. I feel like yields are topping. I felt that at 4.3 though, or at 4.5. I still think TLT could get to 100 by the end of the year. It just needs a little bit of a push from Powell, which based on what Bostic said today, if you missed it in the market open, he said, I only think we're going to get one cut this year. He straight up said it. He didn't even sugarcoat it. So, I mean, if we're only getting one cut, then yeah, TLT is probably going to be cooked for the year, but hopefully there's something to get us to cut. Now, hopefully that reason is not a recession, because that could definitely get TLT to go up, but the byproduct of that would be a recession. If it's not, and we can survive with one rate cut during the year, then I think we'll be okay. But I also think to an extent, Bostic's bluffing. Like, he knows he can't keep interest rates this high. There will be some weakness in economic data eventually that will get him to capitulate. We just don't know when. We just don't know exactly when that's going to happen. Here's Ryan Detrick. He's been pretty bullish all year. These are his thoughts currently on what's going on in the markets.
Tariffs on either way, and some fear there's going to be a reckoning with stretched consumers. Why shouldn't they worry?
Yeah, John, thanks for having me back. Happy Monday, everyone. You know, I would think I was on with you exactly a month ago, on April 22nd. So about, 20 trading days ago. The S&P has been down only 3 of them. And when you think about what's going on, I mean, listen, all these worries and concerns are real. We're not ignoring everything that's out there, but are we listening to what the market's doing, right? The previous 27 trading days, the S&P is up close to 20%. Okay, what does that mean? That's not a bear market rally. That's not a short cover rally. Times we saw that much strength, John, in 1 month, off the 74 lows, off the 82 lows, off the 2009 lows, off the 2020 lows, and right now. Okay. I mean, I get it, right? All these worries, but all this over the top negativity. Yes, earnings probably are not as strong as they were going to be at the start of the year. We get it, right? But all the people thinking that how bad everything's going to be, we're going to avoid all this negativity. And that is why, those markets come back like it has. And I will say, we like Europe also. We like Europe. We like developed international. We've got some European exposure and the money we run for our Carson partners, but we clearly are still overweight equities and have a good deal of U.S. large caps in there as well. So we still think U.S. is going to play catch up with the rest of the globe here the rest of this year, John.
Okay, so Richard, investors still love risk in this market, even if Moodys doesn't. You spotlight the biggest tech stocks here, ex-Nvidia, as being unworthy of their multiples. Tell me more.
Yeah, so John, I think, we can argue all day long whether the Magnificent Seven are magnificent companies, but the reality is they're not unique. And by that, I mean, if you look at the median forecasted growth rate for the Magnificent Six, take out Nvidia, because Nvidia skews the data a little bit. You look at the forecasted earnings for the Magnificent Six, they're supposed to be up about 8% over the next 12 months. Their earnings are supposed to be up about 8% over the next 12 months. The median company in the remaining 493 of the S&P is supposed to be up 9%. Their earnings are supposed to be up 9%. So the Magnificent Six of the 7 are actually inferior growers relative to the remaining of the market. So the question has to be like, what's so special about these companies? And I would argue the answer is nothing. They're clearly not going to grow faster. They're much more expensive. They don't offer dividend yields. There's a clear...
Okay, so first of all, I would not say that nothing is special. Number 2, he's wrong. They do offer dividend yields. A bunch of these guys pay dividends, even if it's a small dividend. Number 3, they each have almost $100 billion in cash to buy back their stock. That's something the other 493 companies, even if they're growing 1% more than the Mag 6, don't have. By the way, the Mag 6 were expected to grow 8% in Q1. They grew 12%. The Mag 7, excluding Tesla. Well, no, including the Tesla when you average it out, because Microsoft, Amazon, and Google beat so heavily on earnings, along with Meta beat by 23%. They grew by 12% on EPS. So although the projected growth rate is 8%, if that ends up being more than 8%, that kind of takes away from his argument. And then number 2, again, I just think these companies have a lot of free cash flow, a lot of net income, a lot of pricing power to be able to, in my opinion, be a little bit different than the other 493 companies.
Differentiation starting to appear here. And I think that's very important. The other thing I would just say, and just to push back on what Ryan said a second ago, you look at 82, you look at 90, you look at all these other periods, 2009, you would not find individual investors carrying a beta in their portfolios of 1.7, which is where we have right now. We have credit spreads incredibly narrow, not wide. We have individual investors taking risks like they've never taken before. That's all.
Yeah, but the risks that individual investors took in May and April, or March and April, beat the hedge funds. Like, he's not mentioning that part. Like, yes, I agree with you. Individual investors went full on risk mode, $80 billion into inflows in March and April, but it worked. like it worked. A lot of people made a lot of money buying that dip. So he can complain about the beta, but if you're not explaining why the having of that beta is wrong, and given where the markets are right now, unless you think it's a full bubble, that beta is very helpful on portfolios and giving it a massive edge against the S&P 500, then I don't know why that's the worst thing in the world.
A little bit different from, I would say, from the periods that Ryan is talking about.
Ryan, what do you say?
No, what's so unique, and Richard's got a good point here, because off this rally, who's really been buying it, right? Mom and pop, retail investors, hedge funds are still short. Most institutions have missed it. That Barron's big money pool, where'd all the bulls go? That was just 2 weeks ago. So this is a really unique situation. But one more thing that has caught us, to why we're optimistic here, market breadth leads price, right? We went over 5 months without a new all-time high on the NYSE advanced decline line, just hit a new high last week. Once again, when you go a while without a new high, only happened 6 times. 1 year later, up double digits every single time on the S&P 500. So can we have some near-term volatility? Sure. But 6 to 12 months from now, we think we're going to avoid a recession, and this is still a lot of upside for investors, and that's something to be grateful for, given where we were 6 weeks ago.
Richard, I think the argument for a better multiple for the Mag 6 would be AI, the idea that you got hyperscalers in there, you got Apple, and if this AI story is true, and if this transition is similar to the one that we saw from the web to mobile, the big names actually didn't get crushed. They benefited more than many people expected. You think that's not worth betting on?
2 things to push back on there, John. Number one is if the profit cycle is indeed peaking, capital spending is a big part of the profit cycle. It's fueled by the profit cycle. If profits are starting to slow, profits growth is starting to slow, corporate CapEx starts to slow. What's corporate CapEx supposed to be all about? AI. So it may be that people are a little too optimistic on the forecast for that. Second thing I want to point out is there's kind of this notion that AI is vastly different from any other technological innovation we have ever seen in history. And I'm not sure that's true. I think certainly technology always changes the economy. Even the key word is always changes the economy. And if you look at the 20-year period since the advent of the internet and everything that was supposed to happen there, U.S. productivity actually marginally got worse. So
Right.
I don't know what everybody's doing on the internet, but it's not enhancing productivity demonstrably the way people argued it was going to.
Well, I know some of what they're doing on the internet. Richard, Ryan, thank you both.
Yeah, I just disagree with that. And also, these productivity arguments, you have to look at different types of nuanced data. If you look at Bank of America's productivity charts, which I pulled up like a year ago, so I'm gonna have to try to find them, but they were showing back at the end of 2023 the level of enhancement in the margins that they were looking at, fueled by AI. And it was akin to what they saw on the internet. And then there was a little bit of a bouncing out because we didn't have any big revolution since the internet. But now that we're having an AI revolution, also we can see it. It doesn't take a rocket scientist to see that pretty much every company is beating on EPS and slightly missing or coming in line expectations on revenue. Why? Because their margins are getting better. Why are their margins getting better? Could be a lot of reasons. But one of the universal reasons is that they're becoming more efficient. I mean, why are Microsoft's margins probably going to be better in Q2? Because they just fired 3,000 people. And a lot of the reason for that might be because they don't need that many people because of AI. So, I mean, for him to say that the AI revolution or the AI as a technology is just a technology and it's not what a revolutionary technology could be like, I think you either agree with that and you sell and you get out of the market, or you disagree with that and you buy. And the more anecdotal evidence I see, the more macro data I see around trends around productivity, AI, what it means to actually be able to build out infrastructure workflows that change the course of an enterprise, government institutions, etc. It just seems obvious that this is only going to get bigger and bigger and bigger. I mean, even, Jensen talking about that multi-trillion-dollar market of humanoid robots, that's coming pretty soon. And when that comes, that's going to be an Nvidia build out. That's going to be a Tesla build out. There's going to be a lot of startups that benefit. There's going to be so many vendors and suppliers in the supply chain that benefit off the increased demand for their parts and supplies to build these robots. It just seems like it's going to get a lot bigger than what most people think. And then on top of that, you got quantum, which I still fully don't understand yet, but you do have a lot of people getting ready for this quantum revolution. And Zucks has talked about it. Sundar's talked about it. Satya's talked about it. Nvidia's obviously talked about it. They've had panels at their conferences. Nvidia's looking to potentially invest in a quantum company. I mean, who even knows what's going to happen when quantum does become a real thing, even if it's 5-10 years away. But I just think it's hard to be short when you have all that technology coming at you all at once. But again, the guy that we just listened to, he is emblematic of a lot of financial managers that when you ask them, how risk on should I be, they stay away from risk. And that's their job, right? They have to protect your money, but they also don't outperform. And this is why I think self-directed investing via the retail community is just becoming so much more bigger, because more and more people are realizing that, hey, it's not the hardest thing in the world to look at companies and then buy and hold and pick individual ones versus having to pick an entire index. It takes work, it takes research, it takes managing a portfolio, but it's not impossible, And as a result of that, I think a lot more people are more excited about the nature of the markets. By the way, let's get a little bit more of an update on that Trump tax bill. That's really what got bond yields to get a bit higher this morning. Not really Moody's, but more so the fact that we are going to continue increasing the deficit. Here's an update on that bill just now.
Fiscal hawks leverage to push for even more spending cuts in this mega bill. And look, the mega bill, it cleared a hurdle. It was approved by the budget committee last night, but 4 Republicans voted present. And that's a warning sign that while discussions are progressing, they have yet to get to yes. One of the 4, Congressman Ralph Norman, told me on Friday that the downgrade puts extra pressure on speeding up cuts, like cuts to clean energy tax credits and implementing work requirements for Medicaid.
Well, we've been downgraded 3 times. We have problems with the money in this country, the debt.
And it's not just the 4 on the budget committee either who have opposition to the bill. Congressman Scott Perry also tweeted that Republicans need to work harder this week to get the job done right, especially since America's credit rating was just downgraded again due to historic fiscal mismanagement, and we're careening to $1 trillion more in debt. The Trump mega bill is likely to add about $3.3 trillion to the debt. That's according to an estimate from the Committee for a Responsible Budget. But of course, that's just the House bill. We expect the Senate bill to change. But the White House this week really starting that push for the House to get their bill done this week. We've learned that Trump will be on the Hill tomorrow morning meeting with Republicans, and we will certainly be covering that meeting. John?
Emily, is there any sense of what it would take to get the necessary Republicans to yes, and then the degree to which that would endanger the bill in the Senate?
John, it's really a tricky balance, because if you want some of these cuts that the fiscal hawks have been talking about, say, take these energy tax credits, if you make sure that they phase out as quickly as they possibly can, there's another group of about a dozen Republicans who say, hey, these tax credits are benefiting our districts. They're creating jobs. We want to have them. That could jeopardize them on the bill. Or if you go further on Medicaid cuts, that leads to another group of Republicans who say, hey, we need to make sure that that some of these programs remain in place. They benefit our constituents. So it's really a delicate balancing act here. We know that Speaker Mike Johnson is having many meetings throughout this week. He expects the bill to be on the floor on Thursday, and he has said that he expects negotiations on this bill to be going right up to the time that they have that critical floor vote.
All right.
This one's going to be interesting, bro. This one, Trump really wants to get this passed. He's going to be really annoyed at any Republicans that don't agree with him on passing this. Robin at 6456 after hours. But I think a lot of people are still skeptical on what that is going to mean for our deficit. Regardless, if he gets that passed, then it's going to be a question of growth outpacing GDP. And if that's the case, then I think we will get, a lot more momentum for the broader markets. But that's what we have right there currently on the spending bill. Apple was a little bit of a loser today. Again, that China headline was not the best thing for Apple. 208.20, that's down about 1.45% of the day. Again, that came from China issuing a statement this morning that they were upset about the U.S. Having tighter export controls on Huawei chips. Basent hasn't really responded to that. I'm sure we'll get some response maybe tomorrow, but as of now, nothing from the White House in terms of the response to China. By the way, Reddit got downgraded nastily today. It got downgraded from 140 to 112, I think at JP Morgan. And the argument was that they're going to lose a ton of search traffic from Google. So that same argument that we had to deal with Reddit back in earnings on the call when the CEO was like, yeah, Google might be an issue. That's why Reddit's down 5% right here. I don't think it's that big of an issue, though, because I don't think Google's losing search traffic that dramatically to the point where Reddit would get hurt. And if they do next quarter, then I don't know what's going to happen to Google. Like overall, they're growing, but the rate of growth is slowing down a decent chunk. It was 15%. Now it's 10% every quarter. So that's one that we're going to have to watch out for when it comes to Reddit. But a lot of the Reddit option volatility has been just crushed based on this idea that Google is going to take away some of their search, which definitely isn't the best for Reddit. Okay, Trump's about to go live right now. What is Trump going live? Yeah, Trump's about to go live. He's not signing an executive order, but he's participating in a law enforcement event. I don't know when exactly that goes live, but we can watch a little bit of it and see what happens. But he is not live yet, but it looks like he's going to go live soon. Here's a take on Apple. Speaking of Apple, with the China stuff, this is one of the main journalists that has been covering this company for the past 20 years, Mark Gurman. Here's his take on why Apple being late to AI might end up being pretty detrimental for their overall iPhone ambitions.
And the biggest thing is they were blindsided when generative AI with ChatGPT and GitHub launched back in 2022, November 2022. I'm told Apple Intelligence wasn't even an idea back then.
Why?
Well, they missed the boat.
But how? I mean, I mean, I don't understand. Yeah.
Well, clearly there was philosophical disagreement and philosophical disinterest in the topic of artificial intelligence. I write about how Craig Federighi, Apple's senior VP of software engineering, doesn't really believe in these multi-billion-dollar projects. He tends to try to shut down or steer away from projects of that sort. And AI is something of that nature. AI is quite a bit messy. They're known for their very intricate and well-designed user experiences. AI sometimes with hallucinations can take away from that, but I think they didn't think it was going to be as big of a thing as it became today. A lot of it fell on deaf ears years ago, I'm told. But really, this is a company that's known for updating their operating systems once a year. It's known as a company that focuses on the minutia, and they missed the big picture here with artificial intelligence, and it really is a shame. You know, the big picture here isn't the AI capabilities of its devices today. The big picture today is the AI capability of future hardware. If you don't have the core technology, the AI ready to go at a deep level, how are you going to develop products like humanoid robots, smart glasses, watches and AirPods with depth sensing cameras for AI purposes? Can't do any of that if you don't have that technology. So they need to seriously turn this thing around quickly, or they're going to be in big trouble. This is as core a technology as the touchscreen.
Wow.
I mean, first of all, how many words is this story, dude?
6,000.
Yeah, this is a long,
Whoa,
well in-depth story, folks. So if you want to get smart on AI and Apple, you got to read the story. It's in the Bloomberg Business Week. It's on the terminal. I'm sure it's everywhere else as well. Mark, what can they do? If I'm an investor, that's the only question I have for Tim Cook. Can you guys catch up and get some of that AI pixie dust in your stock?
Yes, they need to make acquisitions, and they need to up the percentage of that R&D budget tied to AI. They need to up that percentage. They need to allocate more of their hires to AI as well. So they need to go big or go home on this. And I think
do they know that? Do you think?
Yeah, of course they know that.
Okay.
how do they go big?
You got to spend more money. AI is really one of the only things that you can buy your way into when it comes to this technology, right? You can buy your way into it. You just need to throw billions and billions at AI training. They need to make probably some tweaks to their privacy policy, right? They have so many devices. They have more devices than anyone else as a single brand of a hardware company, of any company in the entire world, in the history of the world. But they don't leverage that because of their privacy stance. So maybe make some tweaks there to be able to collect some more data, maybe figure out a way to convince people to give up some of their data for this purpose. And I think that could go a long way for them. So spending money, collecting more data.
One thing they're going to definitely have to do is not just buy back their stock. I mean, there's got to be some other way to leverage that capital. And as of now, I think the market is definitely confused, which is why Apple is not getting as aggressive as a multiple as it got at 250, which is what are they going to do with the $100 billion in cash? We got some breaking news right here, folks. Toyota is taking Toyota Industries private. Toyota plans to buy out Toyota Industries in a deal worth $39 billion. The group expects to borrow up to $21 billion to fund the acquisition, with loans covering roughly half the cost. Toyota Industries is expected to accept the offer, which would bring the company fully under Toyota's control. Interesting. Okay. Quite frankly, I didn't know there was a difference between Toyota and Toyota Industries, but I guess there is. Toyota Industries seems to be a manufacturing company that obviously creates a ton of cars for Toyota, but Toyota itself is the holding company that has a lot more businesses besides just Toyota Industries. TM, ticker symbol for Toyota, that is flat after hours. Not really moving on this news. That makes sense though. Toyota Industries is the company that makes the actual cars. They're the manufacturer. Whereas it's going to be it's basically a $40 billion buyout. Whereas the other parts of their company have a lot more in Japan besides just the manufacturing in and of itself. Now, this is really interesting. I agree with Austin right here in the chat, who says usually when a company goes private, they're expecting an AI robotics productivity boom. I mean, if they don't want to be accountable to shareholders on the public markets by having a company like Toyota Industries being public, it's probably because they want to make some heavy investments and they're going to have to lose some money for a little bit. And maybe it's because they're making some investments to fundamentally re-architect what Toyota Industries looks like versus, what it currently is today. This company, Toyota Industries, was started in 1867. Wow. It has been around for a very, very, very long time. And again, the major product they produce is obviously the Toyota cars. Some sources are saying 39 billion. Some sources are saying 41 billion. They're going to be borrowing 21 billion to finance the buyout. I don't know what that means if you own Toyota stock. Like, do you get additional shares of something else, or how exactly does that work? But you got TM right there. Really not moving after hours based on that news. Yeah, Toyota, they've been doing research on humanoids. We don't talk about them that much because, a lot of us think Tesla's going to win in that game, but I would imagine they are exploring a lot of other verticals when it comes to different forms of manufacturing. All right, let's end off the show with Dan Niles. Let's see what he has to say. He's on live right now, and let's get his take on the market. Again, he has been in cash pretty much January through March. Let's see if he deployed in April and if he continues to believe that this market is a market you want to buy into.
This market's overall direction, though, allowing for some of the spikes we've seen. Well, what's your take? Fill that out on what's happening with yields right now and how it affects stocks.
Sure. I mean, I was expecting a rally. You had me on an interview on April 7th, and I said, look, I think we might see a short-term bounce because you get these bear market rallies in the midst of these sell-offs. And, if you go back and you look at the global financial crisis as a good example, you had two rallies in the S&P of 18 to 19% on your way to new lows. You want to go back further to the tech bubble, you had three rallies actually between 19 and 21% in the S&P 500 on your way to new lows.
So you think we're getting new lows?
I wouldn't rule that out in the fourth quarter. And here's the reason why, John. So you brought up yields earlier, obviously. That's something you got to pay attention to when the 30-year is bumping up against 5% and the 10-year is bumping up against 4.5%. And the question you asked is, well, if you look at those yields, why are they doing that? Well, yes, tariffs, thankfully, on China have gone down from 145% or so to 30. I think they ultimately will go closer to 10. But at the end of the day, tariffs overall are going from about 3% to start the year globally to probably low double digits. That's inflation in the pipeline. So I don't think the Fed's going to cut at all this year. The more important thing is if you look at the US economy, we're about 1/4 of the world's GDP. We had a 41% increase in imports in Q1. So when you pull forth that much demand because people are scared of tariffs, Apple airlifting 600 tons of iPhones, and you have consumers going out and buying PCs and cars and whatever else, you're going to have a payback during the holiday period. And to put it in perspective, during COVID, you had an 88% increase in the third quarter. But that's because you had imports go down 12% in the first quarter and 54% in the second quarter. So you were just doing catch-up.
to clarify, you're saying we probably ended up pulling everything into the U.S., not everything, but almost everything we need for the entire year in these first 2 quarters in the first half because people are trying to get ahead of tariffs?
Yeah, absolutely. I mean, you heard it on the Walmart conference call where they're like, we can't adjust to this and we're going to have to start raising prices. And you've seen this interesting thing where imports surged in Q1, then they collapsed in the month of April. Then when the tariffs got rolled back, they've started to surge again. And so all you're doing is you're just pulling forward an unbelievable amount of demand. I mean, think about it. 1/4 of the world is the United States, and imports were up 41% in Q1. You don't think that pulled forward some demand?
So then what's the impact on things like jobs, whether we're talking ports or warehouses, et cetera, when the demand for new goods from overseas dries up, regardless of what domestic consumer demand is doing if the supply is already here?
Well, and that's the problem, because you go into the holidays. What's amazed me is how many companies on their conference calls for Q1, because remember, Q1 earnings came in better than most expected. I expected them to be good. If you go back and read what I said going into this earnings season, because I thought the pull forward in demand would make companies sound optimistic. I thought there'd be a rally through early May. We've obviously gotten that. But the thing is now, people you look at the estimates for the full year, and the third and fourth quarters haven't been cut. So either you believe tariffs have no impact, inflation coming through the pipeline has no impact, yields up here have no impact, and you're going to get double-digit earnings growth for the full year, or you're going to walk into a situation much like, if you remember, in 2021, the S&P went up 27%, even though inflation surged from 1.4 to 7%, because everybody wanted to believe it was transitory. Then you got into 2022 and the S&P got clobbered for 19%. And I think that's kind of the situation you're in. I think because of underpositioning, you're going to see guys chase. It wouldn't surprise me if you get to new highs on the S&P because people want to believe that everything's great. And then you got a huge issue in the fourth quarter when holiday sales don't come in.
So that's absolutely the picture you see what you think is happening. So give me the scenario, low percentage though you think it is, where you're wrong here. Is it there's some stimulus in domestic demand that actually chews through that inventory and therefore that buildup isn't a big deal? Is it that there hasn't been as much pull in as you expect there has been? How are you wrong?
You look at 41% import growth, John, on 25% of the world's GDP. How are you going to spur that much demand? So I think the question is, how bad is the holiday quarter going to be? Because this is just, to me, like thinking inflation was transitory in 2021, which I was on your network plenty of times saying there's no way this is transitory. I think this is one of those situations where underpositioning, Mike Santoli did a great segment on that earlier, is going to have guys having performance anxiety. People want to believe it's good. I don't know how you get out of this very easily, because it's not like the Fed's going to be able to cut with tariffs in the pipeline. Obviously, they're trying to put through tax cuts or make them permanent, et cetera. But in general, the government's trying to cut back spending because of the deficits, and which look like they're going to go up. And so it's hard for me to figure out how you get out of this when the S&P PE is at 23 times. In the short term, enjoy it. It could go up some more, but then I would get very cautious as you head into the holiday quarter, especially given companies are saying, oh yeah, we didn't have much pull in on their Q1 earnings calls, which makes no sense.
All right.
So the solution to this, I think, is very simple. Number one, the Fed's got to cut rates. Now he's saying the Fed's not cutting rates. It is what it is, right? I would imagine that if we at least get one cut, that would be some way to resolve that. Number two, and this is what I've been talking about for the past couple months, I think we've got to lower that average tariff rate. We went from 24% to 14%. That thing's got to come down to like 7%. Now, how do we do that? We do that by striking deals. So this is about Trump's ego at this point, because he could get some really good deals done with Vietnam and Thailand by taking away that stupid 10% tariff that we have on them for no reason. Like, we don't need to be tariffing Vietnam and Thailand that aggressively. In exchange, hopefully we can get some really good concessions from them. If he does that with multiple countries across the world, that average tariff rate that Dan Niles is so concerned about, because that is the kind of core reason why he's saying it will create demand destruction and or inflationary prices into the holiday season, which is where he's kind of making the argument for why it would kind of look similar to that November top we had in 2021. If we reduce the tariff rates, I think that changes. I think that changes aggressively. And that gets the market to be a lot more welcoming of the new types of economic paradigms we're engaging in when it comes to trade, without having the aggressive types of tariffs that we just don't need against South Africa and Vietnam and Thailand and Cambodia, etc. So I think there's a lot of nuance to this. I also think, obviously, the Max 7 have consistently shown, I mean, Meta beat EPS by 27%. Google beat by 40%. Microsoft beat by 8%. Like, if you keep getting these types of beats going into the end of the year, even for the biggest companies in the world, it's going to be hard to say markets don't rally and markets are afraid of some type of massive decline in GDP. Even Atlanta Fed said Q2's GDP is coming in at 2.5. And that Q1 negative GDP growth we got was mainly from imports that are being pulled forward. I'm not saying Dan Niles can't be right. I think there's a world in which he can be right if we don't get deals and if these tariff rates continue to be aggressive and we don't get rate cuts and bond yields keep spiking and maybe we get a short-term local top on the S&P 500 that gets us back to all-time highs. But I also think momentum can continue to build momentum. And if there's any good news on deals and the byproduct of those deals are concessions that we get from the other side that brings more investment into the United States and we take down our tariff rates, which is kind of what we're trying to do with India and Japan, then I think that is an easy way to navigate the current state of the macro. But obviously it could get ugly too. I just think with all the different bull arguments we have, you're going to need to realistically see the market price out any ability for growth towards the end of the year, which is he's right. That's exactly what happened in 2021. It literally was a bear market rally. And then we topped out because inflation was too aggressive. But again, PPI fell the hardest since April 2020. CPI is at 2.3%. Like, unless the Fed thinks this big boogeyman of inflation is coming in July and August, if we're still sitting at 2.3 to 2.2% in the next couple months, I think you're just gonna have a lot of people saying, why the hell are rates so high? Versus praising the Fed for their safety and conservatism. But I think in the next coming months, we'll have better answers. Okay, Trump is live right now at this police event. I don't think this has to do with markets, but let's pull over to this and see what he's saying. And if not, we'll end it after this.
Thank you very much. Byron, would you like to say a few words?
First, to be brief to the families, we are so sorry for your sacrifice, but your officer from your family represented not just Palm Beach County, but the United States with honor. Mr. President, thank you for allowing us to go forward. To my colleague, Congressman Mass, thank you for your leadership. We will always honor first responders in the United States of America.
Thanks. Okay. So, you want to help us out with this? You do the one in there. That's beautiful. So can we ask the families to step forward, please? Chair, would you like to help us? Please.
I believe this is for a family that lost a husband and a father, and he was inside of an altercation. He was in law enforcement, and that is what I believe this event is for right now.
I would like to thank you very much for honoring my husband and his brothers and for what you do for the country. Making this so very special for them and for all the people to come. It's a club you never want to be in, but you honor them and it just means the world. Thank you. Thank you for
All right. Yeah, I don't think that has. I don't think he's taking any questions or anything like that. But if anyone wants to watch that event, I'll put it in the chat. You can watch it. But yeah, I don't think there's going to be anything else from there. I don't think he signed any bill to do with law enforcement inside of the new budget plan. There is some stuff that has to do with law enforcement. Yeah, here it is. Okay, this is actually something that we could look at that can give us a better understanding of what they're trying to do to remedy some of the issues with law enforcement. So they're investing $1 billion across 40 DOJ grant programs, which support police departments. This is in the new big, beautiful bill. $646 million for the Federal Emergency Management Agency, FEMA. $545 million for the FBI. They want to cut its workforce by about 2,000 people and keep criminals off the street. $491 million for Cybersecurity Infrastructure Security Agency, CISA. $468 million for the ATF, which is the Bureau of Alcohol, Tobacco, and Firearms. $212 million for the DEA, and then $107 million for the Bureau of Indian Affairs, Public Safety, and Justice. So you do have a decent chunk of money they are trying to allocate to law enforcement in that big, beautiful bill. And look, I think they're going to get it passed. I mean, they're getting over a lot of hurdles. They got over a big hurdle last night. They got to get through reconciliation. They got to get these 4 Republicans that are not on their side. They need literally every vote for J.D. Vance to be the deciding vote as the vice president. But if they do get all the votes, then you will see a bill that gets passed. And then the credit markets and the stock market will have to figure out what to do with that bill. So that's what we got. I'll link that right here for those that want to read that as well. This is on the house.gov website. All right, so that is it for me. I'll be back tomorrow on the Market Open. Actually, I'll be back later tonight with Tanner and Roy to do our weekly tech podcast. We'll talk about what's going on with Robinhood and try to make sense of some of the market movement we saw. Robinhood up about 4% of the day. Again, S&P ended green, which was nice, 594.75. Going back to Dan Niles' arguments, I just think that the only way he's right is if we don't get a rate cut or we don't get any level of tariff rates going down from the average 14% that they're at right now. And I think we'll get one or the other, if not both. And if that's the case, then I do think earnings growth will be strong enough to, if not take us to 7,000, which I don't think we have to get to 7,000, but at least at 6,300, 6,400, it's not crazy to assume we get there if we put up earnings growth. And Q2 will be the first test to see if we can get there, given it was the first tariff-based quarter as well. All right, cool. That's what we got today. Thank everybody for being here. Rock Lab 2580 up about 1%. Palantir down about 2% on the day. Nvidia, nice recovery, 135.43. That's green on the day. Tesla, 342. It was at 330, now at 342, so not too bad. It was down 2% on the day, but nice little V-shape from the morning. And then Robin at 64.40. UNH as well. If you bought that dip, congrats. 314 from 248, not too bad. Amazon 206, Meta 639. You got Hood 64.40 and then Palantir 126.21. I'll talk more about the Palantir deal on the daily recap and a little bit more on Hood and some of the stuff going on in the macro, especially with Moodys. But market doesn't care about Moodys, bro. Market does not care about Moodys. And they showed that they don't care about Moodys. Steve can't make it today because, again, he has a job, but he did send me a tweet, a message. He said, well, you guys can read it right here. I don't have to say it. After he texted me about these cakes that he was buying. So there you go. That's his opinion on Moodys. So he's happy. Moodys is a nothing burger. And we'll get him on the show probably tomorrow or Wednesday. And continue to get his thoughts as well. Paulie says, Amit, I love your daily recaps. The best for us who have meetings and work during the day and may have missed something. Thank you, Amit. Thank you for watching them. I really like kind of consolidating the day into 20 minutes, and it keeps me on top of my toes of being able to meaningfully put out the content in an accurate, distilled way because I yap for 6 hours. So having like a 20-minute consolidated view of the markets, I think is important for me as well. So yeah, I appreciate people that have been enjoying it because I enjoy putting it out every day. DT, thank you for the super chat. $2, not bad at all. This market today, not bad at all. So there we go. All right, folks, I'll be back at 9:30 with Tanner and Roy. We'll talk about some tech stuff, and then tomorrow on the Market Open. All right, thank you, everybody. I'll see you guys later today. Bye, everyone.